Hello everyone, I am Pratap here. We are at lesson 29.8. It is about trade preparation and trade management. So, under this topic, you will be learning entry, target, stop loss, how exactly you should identify accurately, and then equity charts versus future charts. It's very important because you are analyzing the equity charts but planning our trades on the future charts. How exactly we have to do this, that I will explain. And fine tuning the entry is a very important technique everybody should know. You need to fine tune to get a minimum 1:3 RR, that also I will explain. And then trailing stop and ROI calculations. Trailing stop is required because to get more profits, and ROI calculation is very important because some of you does not understand ROI calculation. You might be thinking how we are getting huge profits during the intraday, especially in HLQ zone analysis. Everyday videos you are seeing many times we are getting 6%, 7%, 10%, 15%. Rare situations you are getting even 17 or 18, 19%. You might be wondering how during intraday, how huge profits we are getting. Actually, this is the main reason behind planning this session. That I will explain. Even before that, this lesson is having dependency on the earlier lessons. If you don't complete the earlier lessons, so please complete them first and then get into this session. I kept all the earlier lessons in supply demand zone price action course playlist. You can access from the playlist, or even in this video description if you go, there I provided the link to all the training lessons, and also I provided the link in this video description about our Telegram channel. Please also join there because in the Telegram channel I provided all the training instructions and the pinned messages. You should learn the course according to the training instructions, otherwise your learning won't be effective. So go to the video description and access those links. Okay, now I am telling you this ROI calculation part is very important. The main reason for planning this session is because of this ROI calculation related question asked by one of our members. Otherwise, I did not plan this lesson in our training course because I thought most of you might be knowing all these concepts because everyday HLQ analysis videos we've been discussing. Now I realized after seeing the question, maybe some of you are not attending HLQ analysis videos. You might be having different reasons for not attending, but attending those videos at least 1 month is very important because many practical issues you will be knowing. All the important videos related to earlier HLQ analysis videos, even though they are HLQ related analysis, but same concepts, they are applicable for any kind of trading. You can use the same concepts even in the swing trading, only your time frames will be changing. And there are some important videos are there. Everybody must attend those videos, then only you gain better experience. That's why important videos I'm keeping in a playlist. Let me show you that. See, at our channel homepage, click on this playlist. Here you have important strategies and analysis playlist. Click on this playlist. You have, I'm not keeping every HLQ analysis video in this playlist. If I feel the video is important, then only I am keeping them. So far 157 videos are there at the time of recording this video. You go to the bottom. From the old video is available almost 1 year back at the time of recording this video. These are the earlier videos before starting the course. Once we started the course from I think somewhere in December 2023 or October 23 we started. At the time these videos plays the major role. So please go through, whenever you have time, please go through these old videos. Lot of learning will be there, so much of experience you gain, many practical issues you will understand. And there is one more important playlist, that is Q&A videos. Click on this Q&A videos. Many of your questions are already addressed in these videos. If you go through all these videos, if your question is not addressed in any of these videos, then only put your question, so that it saves my time also. And you will also get immediate answer in case the answer is available in these questions. So far 19 Q&A videos are released. Actually, I am in a dilemma. Whatever the lesson I am addressing today, initially I thought whether I should answer in the Q&A video or a separate training lesson I have to prepare. That is what I thought. Finally, I decided a separate training lesson is required, because some of you are not following Q&A videos. If you don't follow the Q&A videos, many issues I am addressing earlier, which is essential for you to learn, you may not be learning, because you are not looking into Q&A videos. But training videos, yes, everybody is going through all the training videos sincerely. There is no doubt in that. So that's why training video, if I address, definitely you will attend this topic, so that future nobody will ask the same questions again and again, because some of these questions are many times people are asking. I am addressing, okay, now people who are at present currently following me, they all will know, but future whoever is joining, they may not be knowing about this video if I did not keep in the training lessons. Again, same question they will ask. Especially this is a very important question, that future charts versus equity charts. Many people are asking questions about this. Okay. What is the question our member asked? Actually, what is the reason behind preparing this lesson? Yesterday we have released a HLQ analysis video. This is the video on 25th April 2025. Why I am specifying the timestamp? Those who are attending this lesson, they should understand the background. Future, you should go through this video and then you should attend this lesson. Even those who are attending this lesson, if you did not complete the 25th April 2025 HLQ analysis video, if you did not complete, first you complete that video and then getting into this video. Of course, some additional topics also I am teaching in this lesson, especially future charts and equity charts comparison is a new topic. It is not related to this question. But after seeing this question, I got this point in my mind. Probably this topic also I should address, so that many of you, especially who are planning trades, you won't feel any difficulty once you are getting into your work. Your trading work. Okay, this 25th April 2025 video you can access from the video section. You go to our home page, NeoStock home page.
Hello.
Click on this video section. Under video section, you can find. If it suppose, okay, now it is a recent video. In future, it will become, after 1 year, it will become old video. It may not be displayed here. Go to the search. In the search for this timestamp, 25 APR-2025. If you search, probably the search will display this video. What is this video is showing? You have 17% ROI for Sriram Cements, and 11.7% is the ROI for Grasim. So one of our members surprised by seeing this. See, 17% and 11.7% Grasim. So that's why I said, sir, I am not understanding how you are saying that these two stocks gave this much percent in a single day. Even in the charts, it is showing very less than this. Please clarify. My assumption, all these days, my assumption, all you people are aware of futures concept. But after seeing this question, probably he might have asked, maybe he is not aware of futures concept. Though I am not teaching futures, but you can easily learn if you search on the Google, So many tutorials you may get. So all those who are not aware of futures, please read futures. Maybe for studying options, a lot of competency is required. So many strategies you should understand. Even I am not, to be honest, even I am not comfortable with options. But I am very much comfortable with futures. So anybody can easily understand futures concept. The advantage you get because of futures trading, learning will be easy, first thing. Second thing, you get opportunities to trade either side, long and short. Hope I am believing all of you are aware of long trading and short trading concepts. If you are not aware, you must learn this. Please search on the Google. You can easily find some good articles on this. So futures, we get this advantage. And third advantage, you get 5 times more profits, or worst case scenario, maybe 4 times profits you may get compared to the equity. How that I will explain. Maybe you are not aware of these concepts, that's why you might be wondering how we are getting this much ROI. This is what we've been discussing for the last 1.5 years. If you look into everyday HLQ analysis, always I say whatever the profit we are getting, they are calculated based on one future's margin cost. I always use this statement. Because I know because new people join them, if they are not aware how we are getting this much profit, they might be wondering. That's why majority of the videos, maybe if I may slip in 1 or 2 videos, but majority of the videos or almost all the videos, I always say, this profit is based on one future's margin cost. Even in this video also I said the same. If you look into the timestamp 12 minutes in this video, the 12th April 2025 HLQ analysis video at the timestamp 12 minutes, I clearly said the profit 17% is based on one future's margin cost. What is that margin cost? How we will check the margin value? That also I will explain in this video. Okay, I am not going to analyze any charts in this video. Already whatever the analysis we did in 25th April 2025 video, same analysis I am taking. That's why I am telling all the members, refer that video first and then get into this lesson. Okay, anyway, in this series, lesson 29, first video, lesson 29.1 video, I already explained how to analyze HLQ zones. I wish you are all aware of these concepts. You know how to fine tune the HLQ zone till 5 minutes time frame. So that's why I am not repeating that analysis. Let me directly get into the trade point of view, then compare future charts and equity charts, how we can compare. Okay, now I am directly entering into our main discussion, analysis, whatever we did, that chart I am taking. The first chart, I am going to give you 2 examples. Whatever I am going to explain, same thing I repeat in both these charts, so that you get better clarity. Any doubts you have in the first chart analysis, first chart trade management discussion? If you have any doubts, probably those doubts may clarify if you repeat the same discussion in Grasim, the second trade. First I am taking Shriram Cement. See, Shriram Cement is a daily 75 minutes high liquidity zone. Our software identified. It's a very old zone. When our software identified this zone as a high liquidity zone, and when this zone was created, this was created on 9th April. 11:45 leg-in, 2 base candles with a hidden body, a drop candle on 12th April 2021. Almost 4 years old trade. For 4 years old, more than 1 year old, the problem is trading you can't access 5 minutes data. But there is no problem. The reason is in the recent price when moved, lot of order flows are created in this zone. I already explained how we fine-tuned everything in the previous video, but quickly, even though I told you I don't explain, but quickly let me complete. Go to the 15 minutes time frame. 15 minutes, you have a drop base drop is there. You have a rally base drop is there. And here you have a drop, 2 base candles and a drop. Here again LOTL zones are created. Rally base drop, drop base drop within the same zone. Okay, but we have drawn this again within this 15-minute zone, we have drawn 5-minute zones. Go to the 5 minutes time frame. Here you have a 5-minute zone, drop base drop. Here again you have another drop base drop and follow through candles. Here you have again drop base drop. Here also you have drop base drop, follow through candles are there. But here I fine-tuned at 3 minutes level. See, rally, 2 base candles with small hidden body drop and follow through candles. So this is the area. First you have to plan, and then here and then here and then here. But here what are the things you should take care? Everybody please concentrate from now onwards. Now we have to define an entry, stop loss, based on the stop buffer. Stop loss is based on the stop buffer. And then your target. How do I do all these calculations before I take my trade? Before taking the trade, what I do? But I am doing my analysis in the equity chart. But future chart I am taking trade. If you take a chart in equity, if you take a chart in, if you take a trade in equity, or if you take a trade in future, what difference we get? That also I will explain. So I am combining all these concepts and doing this analysis. So now we have a zone is ready. Okay, in this zone is ready, can we take a trade directly here? Maybe or may not be. Why? Because this is our type 2 proximal. Why can't we take a trade here? The reason is, if you want to plan a trade in a zone, the risk should be within 2%. You cannot plan a trade beyond 2%. That is one thing. Second thing, do you want to take cash trade or futures trade? That is very important. Again, in the cash trade during intraday, your broker will be giving 5 times margin. Do you accept that 5 times margin and plan your trade? Or without taking any margin, just whatever the price, on that price only you are planning your trade? That is another question. You should think. Because why I am telling these points? After seeing this question. Because he surprised how we got 17% profit. Actually, it's a very good question he asked. I must appreciate him. Otherwise, today you might not be having this video lesson. Just because he asked this question, we got the opportunity. Prepare this video lesson, and at the same time you are listening this video. Right? So that's why I am saying it's a very good question. Otherwise, I would not have thought about preparing this video. So 3 points you should get into the mind. First point, equity trade, cash segment without taking any margin amount. Second, taking equity trade but with the broker whatever the margin he is giving, that I want to utilize. Third, futures trade. What is the difference among all the 3? Okay, first trade is you have a cash of 1 lakh rupees. For 1 lakh rupees, whatever the number of stocks you get, those stocks you take and you go for a short trade during intraday, because intraday short trades are supported. You have to close short trades, but you can't carry the short trades to the next day if you are taking trades in cash segment. The advantage with futures trade is you can carry the positions to the next. Within the month future expiry date, you can hold, but on the expiry date or before the expiry date, you have to exit the trade. Okay. And you know futures expiry will be the last Thursday of every month. If the last Thursday is a holiday, before working day, will be the expiry day. If you look into this month, see recently when Thursday 24th April 2025, your futures were expired. So that means on that day you have to close your positions. Next month positions you can take. Futures you have 3 months always, anytime. The current month, next month and the far month we call. The 3 months futures you can take. You can buy the current month future, or you can buy next month future, or you can buy the far month futures. That means current month is now April, this is April is over, May month is current month. Next month, June. And the next far month, July. In any of these 3 months you can buy the futures. Buy means either you can go for a long or you can go for a short. Hope you know the difference between long and short. If you are not aware, please do some study in the internet. Because I don't want to get into those areas, because my interest is only on supply demand zones. So that's why other topics I am not planning any sessions. Because my major goal is about NeoStock software, not even this training. Because software is using these supply demand zones, you all got an opportunity to learn this course with free of cost. I am not charging any money. Everything, the knowledge I am having, I am sharing with you. Please remember this. Okay, this is the area we are planning our trade, because our software listed stocks near 75 minutes supply zone. Supply zone means you should go for a short trade. Suppose if you want to plan a trade in futures, what is the first? Because always we are giving focus to the futures. What is the futures? What is happening in futures? See, in futures charts, always there is a margin amount. That amount if you pay, that is enough to trade in a particular stock. How do you know the margin cost? So your brokers will be providing those details, exact margin, because there will be some difference, the cost difference. Not a huge difference, some difference. Few brokers will allow a little shorter margin compared to the others. But remember, it's not a huge difference. Maybe you may see some 1,000, 2,000 rupees difference will be there in the overall cost of the margin among the brokers. So that's why always you should ask your broker what is the margin for each stock. What is the meaning of margin here? Brokers are giving you some discount. If you want to buy one future, how many stocks you have to buy? Single stock a future supports? No. Future always supports a multiple stocks. What is the entity? That multiple entity, that every stock we have different values. How do we know those values? One thing is from your broker software you can find, or I always use a tool called Zero the Margin Calculator. Let me show you. See, this is the URL. Zerodha, zerodha.com/margin, margin hyphen calculator /span/. Hope everybody is able to see this URL. Now highlighted in blue color. Okay, so this URL if you type, you can get this F&O margin calculator by Zerodha. This is available to the public. Even angel broking is also margin calculator also available. So this is the most popular, many people refer this. But remember, whatever the margin amount they are showing, that value will be nearer to the values provided by different brokers. It may not be exactly the same. That is what I told you. There is a difference of some 1,000 or 2,000 rupees difference will be there among different brokers. Okay. Here, which stock you want to refer? Sriram Cements. So I am copying the script name. This is the NSE symbol. Always you have to use NSE code, symbol code. So here the symbol I am typing, Sriram Cements. For month is, I think they are not updated in this list yet too, because last Friday only, Thursday only, I think they have to update the list. But anyway, May month. May is the current ongoing month, futures. Because April is expired, April futures expired on last Thursday, that is 24th. After 24th, May month futures will be coming into the action. So, the latest month, May month, I am selecting for Sriram Cements. Okay, what is the cost? 25. What is the excuse me. So, what is the quantity? 25 stocks. If this one future is having 25 Sriram Cement stocks. That means if you are buying one Sriram Cement, means you are buying 25 stocks together you are buying. You can't buy 24, you can't buy 23. You have to buy all the 25. That is called one lot. If you want to buy more than 25, you have to take 2 lots. 2 lots means 50, total quantity 50 stocks. Okay, 25 stocks if you want to buy individually. Say for example, you want to buy individually. How much money you have to invest? Okay, where you want to buy? Say for example, you want to buy at this type 2 proximal. Okay, type 2 proximal value how much? Okay, the exact entry, stop loss, everything I will explain later. First we will understand this difference. This is a distal line is 31,000. Here 30,945. So I am copying this value. This is the value entry. This entry value is 30,945. If you want to buy, place an order here. Okay. Let me open the calculator. Okay, in the calculator I am copying the value. This is one stock value. If you want to buy one Sriram Cement, buy means maybe you can go for a long or you can go for a short. In this example, short. If you want to short one share of Sriram Cements, you need to invest 30,945. But according to the futures, what is the lot size? 25 stocks. But whatever you are seeing in this calculator is the value of a single stock. But can you buy single stock in futures? No. You have to buy 25 stocks or 50 stocks or 75 stocks. That way you have to buy. Buy means either you can go for a long, you can go for a short. Okay, what is the money I have to invest? Suppose I don't want to use futures. I want to use equity only. But I want to take these 25 stocks. So very simple. The value where you want to go for a short, 30,945. Total how much quantity you want to take? 25. So into 25. So how much money you are investing? 7,73,625 rupees you need to invest to go for a short of 25 stocks. But many times brokers will be giving you 5 times margin. 5 times margins means what you do? Divided by 5, that equals to 1,54,725 rupees. This is how you will be thinking, right? No, it is not like that. The value not exactly 1,54,725 rupees. It's not exactly like that. They have their own calculations. I don't want to get into that part. But the final value, how much we need to invest, that you can see here. In zero, the margin calculator. Click this add button. Now, they have some calculations. That is what some span value, exposure margin value, both together, whatever is coming. That is the money you have to invest. That is what I told you earlier. This value not exactly same in all the brokers. There will be some difference, some 2,000 or 3,000 rupees or maybe 1,000 rupees difference will be there among the brokers. But according to Zerodha, if you are using Zerodha, you have to use 1,36,179. Other brokers also near to this value, you will be paying to them. See, that means for buying 25 shorts, going for 25 shorts, if you want to go for a short trade for 25 stocks, I repeat, If you want to go for a short trade with 25 stocks in Sriram Cements, you are supposed to invest 1,54,725, sorry, into 5 total. You are supposed to invest 7,73,625. Because broker is giving you near to 5 times margin, your investment is only 1,36,179 rupees. Or near to that value, somewhat near to that value. If you calculate your ROI, return on the investment, for this investment, the ROI is different. If you are calculating ROI for 1,36,179 rupees, the ROI is different. Because the value is high here, your ROI will come less. Because 25 stocks, you are investing 7,73,625. But the same 25 lakhs, you are investing only 1,36,179. Did you observe the difference? In this first example, by investing 7,73,000, you are buying 25 shares. But in the second scenario, for buying the same 25 shares, either long trade or short trade, whatever you are planning, for the 25 shares, you are investing only 1,36,179. This is almost equivalent to 5 times less than this actual investment. 5 times less. That's why ROI will be changing. How ROI will be changing, that example also I will show you. Because you should understand, if you don't take the margin, whatever the money you have, only that money you are investing. What is the profit you get? But you are taking this margin, as per the margin you are investing. What is the profit you get? That you should understand. So let me show you those calculations. First of all, how I do the calculations ROI. Go to the chart. So here we go for a short. So this is the area we went to the short. And using trailing stop concept, you already learned a trailing stop loss in lesson 19, right? Using that concept, we captured the whole big move. So that's why I'm calculating up to here. That is what we discussed in the HLQ analysis video. Please refer the HLQ analysis video, the discussion, everything I explained. In this video, I'm not repeating that everything again. But anyway, in this video, you have a trailing stop concept also I want to explain. I'll be explaining the same thing again. Nothing to worry. First, let me make you understand difference between investing in the cash segment without taking any margin and investing in futures by taking the margin. Anyway, by default, if you are going for taking, you have to take the margin. There is no other option. You cannot say, I will invest 7 lakh rupees. The minimum, the thing is minimum you require. You can have any amount in your account. But minimum, if you want to go for a trade, minimum you require 1,36,000. It's not 1,36,000, 1,36,500, close to that. Why? Because this current price, the closing, this is the closing price here, right? Now if you want to go for a long or short here in this position, the money you have to invest is 1,36,000. But we took the trade a little above. When prices are moving up, the margin value also increase. When prices are going down, the margin value will be reducing. Approximately, I am saying by the time price reach here, you might be having some 200 rupees or 300 rupees additional margin will be added. So that way I am saying it could be 1,36,500 rupees. Maybe 50 or 100 rupees difference will be there with my assumption, but that is okay. That won't make any huge impact in our calculations. Okay, here you are buying. Why we are buying, I will explain. While fine-tuning the entry, I will explain. Our entry is, our actual entry for this particular stock is 3 lakh sorry, not 3 lakhs. Entry price is 30,959, 90 paisa. So I'm copying that value. That should be the entry for this particular stock. How we calculated exactly that entry, a little inside the zone, that I will explain. All the techniques I will explain. First, I am going to clarify the difference between equity price and futures price. Equity, how much profit you get without taking the margin, but in future, how much margin you get. I am comparing into window. I am taking two calculators. This is the first calculator. This is for equity stock. I am going to use first calculator. Let me open one more calculator. This calculator I will be using for futures charts. Okay. Let us assume at the same price we are using. But in reality, futures, you may not be using the same price. The price will be different. That I will explain once again, once we are comparing equity and futures prices. Many things you are going to learn. So a lot of concentration you have to put. Okay, this is equity. You are taking futures also. Let us assume same price you are buying. Actually, future price is slightly different. But time being, you assume future price is also same. Time being for this calculation. Okay. Next, where you are going to sell? In this zone. This is your target zone. How we identified this target zone, that I will explain once we get into trailing stop. But timing calculations part, you accept this is our target zone. So target zone, what level you exit here? 30,030 rupees. So I am copying this value, pasting in the both windows. So far there is no difference. So minus, what is the profit you got? 929. Here also 929. So far no difference, right? Whether you are using futures or you are using your equity without any margin, there is no difference. First window is equity without margin, second window is for futures. Let us assume in both the cases the profit is 929 rupees 90 paisa. That means close to 930 rupees on one stock. Okay, how many you are buying? 25. We are buying in both equity as well as futures. So into 25, how much profit you are getting? 23,247. Here also into 25, because one lot you are buying, one lot is 25. So here also profit. That means whether you buy in equity or you buy in futures, the profit is same. But in future charts, you see small difference that you will understand later. But timing, I am doing simple calculations. Okay, now the most important thing comes into the picture. What is the money? How much money you are investing for buying equity? How much money you are investing buying in futures? Buying means going for short here, for short trade. Profit is same, but your investment, to get this profit, what is your investment? Similarly, in futures, to get this profit, what is your investment? Okay, here how many? 25. What is the cost of each share at the time of you have gone for a short trade? The entry price 30,959, 90 paisa. Let me copy this value. Let me open another calculator. Into 25. So this is the money we invested. Let me copy this value. 7,73,000 rupees we invested to get this profit. Do you agree? 7,73,000. For 7,73,000 something, this is the profit. If instead of 7 lakh, if it is 100 rupees, how much? Do you remember the simple mathematics? See, by investing 7,73,000, some change, some odd value, I didn't remember. Okay, let me say 7,73,000, you got this much profit. For 100 rupees, how much will be the profit? Maybe in 4th class or 5th class, we might have learned that. So the key question is very simple. I repeat again, for 7,73,000, if 23,000 is the profit, for 100 rupees, how much? The calculation is 100 into 23,000 divided by 7,73,000. So that is what this 23,000 into 100 divided by 7,73,997 here. Okay. So how much profit you got? You got 3% ROI you got. Probably the one who asked me this question. Even in charts it is showing very less than this. Please clarify. Probably he calculated in the cash segment without any margin. That's why he surprised how we got 17% profit. Maybe you got a mind something wrong calculation I did. That's why he asked this question. That's why you all got an opportunity to listen this video today. Otherwise, I would not have made it. I thought you are all aware of these concepts. Maybe, I'm sure, some of you might be thinking like the way how this member sent this question. Some of you might be thinking, maybe those who are not having idea about futures, you might be seeing only equity charts, you might be wondering how we got 17% ROI. Without margin, you are getting this ROI. 3%. But what is that we are doing? We are taking our trades in futures. Future, instead of investing 7,73,990 rupees, how much you are investing? Only 1,36,179. That is at the closing price. If the trade is at this, obviously some another 200 or 300 rupees value might have been increased, the margin value. That's why approximately I am adding 1,36,500 rupees. That is higher value, not more than that. If value is increasing, what will happen? Our ROI will be reduced. So that's why I added higher value only. Because I don't want to exaggerate by showing more values, more profits. But it is not required for us because our zones are giving good profits. Okay. So this is equity profit without margin. Now let us see futures profit. What is your investment for buying this one lot? 1,36,500 rupees. For 1,36,500 rupees, you got 23,247 rupees profit. Then for 100 rupees, what is the profit? 100 rupees means what? If your investment is 100, that is what 100%. For 100, what is the ROI you are getting? So for 1,23,000 rupees is the profit. Sorry, 1,35,000 rupees. This is the profit. For 100, how much? So 100 into 23,247.5 divided by 1,36,500 rupees. So let us do that calculation. So 23,247.5 into 100 divided by 1,36,500 rupees. How much profit you got? 17.03. That is what you have seen here. Shriram Cement intraday ROI 17%. Got it? See here, Shriram Cement here. Shriram Cement, it is 17% ROI. We got that exact calculation, right? But without looking into the futures chart, if you looked into the equity, only equity price, you calculated 3,000. 3 into 5, how much? 15,000, 15% ROI, 15 times, 5 times extra ROI you will get. 3 into 5. Because margin cost is a little less, you got 17% ROI. Otherwise, you would have got 15% ROI you would have got. See, broker gave you 5 times margin, you will be getting 5 times additional profit. Compare it to the equity. Okay, is our discussion completed related to this particular topic? No, not yet completed. There is another interesting calculations we have to do. What is that other interesting calculation? Okay, because this stock is stopped out, sorry. This stock is given good profit. This is the profit you are seeing. Suppose if the stock would have been stopped out. Let us assume our analysis went wrong. This stock is stopped out. How much loss you would have got in equity as well as in futures? This is the profit. If you don't take margin, 3% ROI you are getting. If you are taking margin in future anyway, by default they give margin. There is no question of whether you take or not. You have to take. Even if you don't take also, still it is margin is only 1,53,000 only. Minimum, that is the amount should be there in your account. If you keep 7 lakh account also, in your account 7 lakh rupees also in your account, it doesn't make any difference. Your stockbroker will take only 1 lakh, that 50,000 rupees, 1 lakh 36,000 rupees only he will take. What is that? Yeah, 1 lakh 36,500 rupees only he will take. Even if you keep 7 lakh rupees in your account, he won't take that money. But if you are buying in equity without any margin, your broker will take that 7 lakh rupees, whatever we did the calculation. 7 lakh 73,997 rupees. So let me say simply rounded value 7 lakh 74,000 rupees. Your broker would have been charged. Of course, he will also charge additional taxes, security transaction charges, brokerage charges. But F&Y, another advantage is the brokerage charges are less. That is one small advantage. But anyway, they are all negligible when you are comparing with these profits. Just a couple of 100 rupees, if you are paying for taxes, you don't really bother about when you get 23,000 rupees profit. Even if you get 6,000 rupees profit also, paying 200, 300 extra money, it won't bother you anything. So that's why I'm not focusing on brokerage charges in our calculations. Okay. So suppose your trade is stopped out, then how much you get loss in equity segment and how much loss you get in futures. Equity segment without any margin cost, because equity also broker will give you 5 times margin during intraday. Mostly the value could be more or less close to futures value. Okay, now look into Shriram Cements. Same Shriram Cements. Where is the chart? This is our chart. Okay, this is our entry. What is the entry? 30,959 entry. But what is the actual supposed to be your entry? The type 2 proximal. What is type 2 proximal? 30,945. Instead of 30,945, we are taking trade at 30,959.90 paise. Another 19 rupees 90, close to 20 rupees inside you took the trade. Why? What is the reason? That I will explain a little later. But time being, you accept this is your entry. Then what is your stop loss? Stop loss in general supposed to be your distal line. What is the distal line value? 39.45. But what is the value it is showing? Stop value 30.40 rupees, 31.40. Why there is a difference? Here the value is supposed to be sorry, 3945 is entry, sorry. 31,015 should be your distal line, but instead of that, you kept some a little higher. What is that? How much? 31,000 instead of 35, I am keeping, 25. Keeping 40. Is it 25 or 50? Sorry, 15. 31,015. Instead of 31,015, 31,040. What is the difference? 25 rupees difference. 25 rupees higher value I am using, higher. Why I am using higher? Because you already learned a stop buffer concept. The 3% ATR value. Where is that 3% ATR value? Here. See here. Sriram Cement. This is Sriram Cement. What is the ATR? 22.78 paisa. But why I am giving 25 instead of 22.78? I can round to 22.78 means 80 paisa I can round. But why I rounded to 25? Because the value is 30,000 rupees. I told you if the value is more than 20,000 or maybe 18,000, better you round to nearest 5 rupees. So that's why I rounded to nearest 5 rupees. In one of the HLQ analysis video I told, not in our regular course, probably this is the regular course. All of you please listen this point. Maybe if the value is more than 15,000, more and more values are going. Rather than rounding to paisa, maybe rounding to rupees. So here 30,000 rupees value, maybe rounding to nearest 5 rupees is important. If it is maybe if 60,000, 70,000, 80,000 value of the stock value, maybe I will round to nearest 10 rupees. Maybe if it is 10,000 rupees worth, maybe I will round to nearest 1 rupee. If it is like 2,000 rupees or 3,000 or below 3,000, I will round it to nearest paisa values. Okay, so that's why I rounded to 25 rupees. Instead of 22 rupees, 80 paisa, I rounded to 25 rupees. Hope you got clarity. Because I rounded to 25, my stop buffer will be 25 rupees above the distal line. See, the distal line value is 31,015 rupees. Instead of 31,015, add 25 rupees. That is 31,040 rupees. So that is what it is showing. 31,000. The stop level is 31,040 paisa. Got it? Okay. Now what I do? I calculations. My stop loss minus entry 3140. Let me open both the windows. 3140. 3140 in both the windows I copied. And what is the entry? 30,959.90 paisa. How I derived this value? That is the next topic discussion after completion of this. So minus. So if you get a loss, the loss for one share is 80 rupees. So 80 rupee, 10 paisa is the loss for each share. How many we are buying? 25. Equity shares 25. Our future one lot is having 25. So that's why our loss will be into 25. So what is the loss in either case? Whether you are planning your trade in equity or you are planning your trade in futures, in either case, in both the sides, your loss is 2,000 rupees for 25 stocks. Okay, 25 rupees is the loss. But what is the entry? For buying all these, what is the entry? $30,959.20. Okay. So equity, how many stocks you purchased? 25. With what value? The 30,000 or whatever the value we copied. Let me open another calculator. This is for one share. We brought 30,959. We are investing the value in equity segment, not futures. Equity segment, for single share we are adding a capital 30,959, 90 paisa. Total how many we purchased? 25 into 25. So what is our total capital? 7,73,997.50 paisa. Round value 7,74,000 approximately. So that means, I am closing this window, that means we got this 2,000 rupees loss. Actually, this is the loss. You got this 2,000 rupees loss by investing 7,74,000 rupees. For 7,74,000, 2,000 is the loss. Suppose if it is 100 rupees, what could be your loss? 100 rupees means like 100%. What is the loss? So 100 into the 2,000 divided by 7,74,000. So this 2,000 into 100 divided by 7,74,000. The exact value 7,73,997.50 paisa. So how much loss you got? Percentage 0.25. Round value 0.3%. You got a 0.3% loss. That is a negative ROI. Whenever we get loss, we call it as a negative ROI. Positive ROI is profit. Suppose if your trade is stopped out, only 0.2% of or only 0.3% of your capital will be affected. What is the maximum accepted risk? 2%. Maximum accepted is 2%. But what is the money you are losing in this particular stock? Only 0.3% or 0.25%. Or round value 0.26%. That's why I am saying 0.3 is the rounded value. You are losing only 0.3% of your capital on 7 lakhs rupees. But if it is futures, what could be your loss in case your trade is stopped out? So 2 lakhs. This 2 lakhs loss is for how much capital? This here your loss to this not 2 lakhs loss, 2,000 loss. For 2,000 loss, here your 7,074,000 capital. But here the 2,000 loss is only for 1,36,500 rupees. That means 1,36,500 rupees you got 2,000 rupees loss. Then if it is 100 rupees, how much? 100 into 2,000 divided by 1,36,500 rupees. So let us do that calculation. This 2,000 into 100 divided by 1,36,500. How much money you lost? 1.467, rounded value 1.5%. Here you got 1.5% loss, but in equity segment you got only 0.3% loss. Where you have more loss? In futures you have more loss. Is it okay? Okay, because it is not crossed our 2% risk. What is our maximum accepted risk? Maximum accepted risk is 2%. You can't accept our trade above 2%. Previously, some of our stocks got stopped out. How much that day we got? 1.3%, 1.2%, 0.8%. Or maximum we have seen some 1 point or 1.5 or 1.6%. Such kind of losses you have seen. Maximum. Many times average 1.2%, 1.1. That level you got many average losses. At the time, did you not get the doubt? We are getting only 2% or 0.2 or 0.3% loss. Then how come you are showing 1.4% loss or 1.3% loss? At the time we didn't get doubts. But when we got the doubt when we got maximum profit. See, remember, you have to apply the logic. See, when we get 17% profit, we got a doubt. How come we got 17%? But we did not get any doubt when you get 1.4% loss or 1.3% loss. At the time, immediately your mind should say, I'm getting only 3%, 0.3% loss. How can Pratap is saying we are getting 1.3% loss or 1.4% loss? Why he is showing more losses? When I am showing more losses, we did not get any doubt. But when I am getting more profits, we are all getting doubts. See, first you should have confidence on your faculty, on your trainer. See, when I am every day publishing the results in YouTube to the public, everybody is watching, right? When everybody is watching every day, do I have any scope to cheat anybody? No. How can I cheat anybody? Anybody can cheat you 1 day, 2 days, but not 365 days, right? So the first doubt you should get. See, I'm not blaming anyone. When you get doubt, first maybe he is a genuine person, he got a doubt, that's why he didn't send any public comment. He sent a message to Money and he forwarded the message. The moment I saw the message, then immediately I understood the problem. I know that he is not referring future charts, he is referring equity charts. Only equity prices he is referring, not future prices. Then I thought maybe he is not aware of futures concepts. Then I thought, no, maybe if one person is having doubt, definitely similar to the same, at least more people will be there. More people will get some similar kind of doubts. Maybe they are not expressing. Maybe some people might be thinking, maybe I am publishing wrong data and probably quietly without saying anything, they might be leaving our channel. That could be another reason. Because they are not aware of futures concept by seeing the figures. That's why I know this problem will get. That's why carefully I am using my words when I am explaining. Every time I tell, whatever the profit we are getting as per one futures margin cost. Even yesterday's HLQ analysis video also, the 24th April 2025 timestamp HLQ analysis video at timestamp 12 minutes, I clearly said the 17% ROI is per one futures margin cost. I always use this word. Maybe I might have slipped in 1 or 2 videos, that is a different story, but maximum every video I will tell. The profit is as per one futures margin cost. By seeing the word immediately we should understand. Those who don't having proper knowledge on futures, immediately they should get a doubt. What is a future margin? What is future? Such kind of doubt you should express. Why we are going for futures? We get more profit. At the same time, what is the risk? Losses also we get more. See here, we get only 0.3% loss. But here we are getting 1.5% loss. How many times? 5 times more, right? When you get 5 times more profit, your loss also will be 5 times more. Still we are in a position to accept because the 2000 rupees loss is not really, does not affect our overall capital much. Suppose if our trade is against our analysis. See, people are getting 30,000, 40,000 rupees loss without risk management. For the same 1,36,500 rupees capital, without following this risk management properly, there are many people. Probably some of you might have got that much losses previously without following. Even I am also not exceptional. At my early stage of capital, I lost 80% of my overall capital just because I did not follow my risk management properly. Why I did not follow? I was also like you guys in the early stage of learning. Early stage of learning, what is our mind will be thinking? Within short day, we should get more profit. Within the short day, we should become rich. I was also like that only, like you guys only. That's why I always say give importance to risk management. Those days I don't have such kind of knowledge about risk management. I know I should follow stop loss. At that time there are no supply demand zone concepts. I was using the traditional technical analysis concepts like support line, resistance line, channels, triangles, wedge the head and shoulder patterns, cup and saucer, all the patterns. I studied in the year 2002 time period. 1 year I studied all these things. Everything was self-study only. At the time, there were no trainers. Internet also not very strong like what we are seeing today. Still, the resources are available at the time on the internet, because all those concepts developed in the year 1950s and 1960s and 70s. So all the concepts I learned, every concept, all indicators I know. I know RSI, I know stochastics, I know parabolics are. Many of those indicators already I built in NeoStock software. NeoStock software I started with building those indicators. Later I updated my skills in supply demand zones. Then I was started focusing on that. Finally realized supply demand zone is the much better than any other concepts I have seen so far. Why? Because of the risk management. I liked supply demand zone mainly because of the risk management. I know how much money I am going to lose before I accept the trade. If I don't want to lose that much money, I have the option to fine tune the entry. That is what I am going to explain the next immediate topic. I have the flexibility. I know what is the profit I am going to get. I know minimum 1:3 how much I am going to get. That also I am going to show you now. The next immediate topic. I know how I can extend the profits more even after reaching my target using trailing stop. That is also you are going to learn now, soon in this video. You already learned, but we are going to experience now in these charts. How we got this 17% ROI using trailing stop loss, how we got, you will understand very soon. But the first topic in this video is to make you understand the difference between taking a trade in equity in cash segment without taking any margin and with margin in futures, how we can take. Now you got the clarity. Futures we get 5 times more profit, even losses also 5 times more only. Even though the losses are 5 times more, still we are making sure the loss is not beyond 2% of your capital. Because it is not 2% of your capital. That is one advantage. HLQ zones, success rate is more, failure rate is less. Even some trades are stopped out, still we are in profits. See, all these advantages we are making use, and then we are getting these profits. Now tell me, is there any surprise in getting this 17% profit? No surprise. If our analysis goes wrong, we are also getting 1.5% loss on our capital. But here you are getting only 0.25% of your capital. But only difference is here your capital is 7 lakhs. Here your capital is only 1,36,000. 5 times less capital. With 5 times less capital, you are getting more profit. Of course, your trade is stopped out. Your stop loss is also 5 times more compared to the equity loss. But the point you should understand here, even though 5 times more, it is within 2% profit loss level only, within 2% only. How it is within 2%? That is what the beauty of our supply demand zone price action risk management system. That is what you learned in lesson 19. Our loss should not be, loss means risk. Our risk should not be more than 2%. That is the beauty. So it is within 2%. The only difference is within 2%, here 1.5% loss. Here within 2% only 0.3% loss. That is the only difference. You got it? Profit we got same. Both we got same profits. Loss also same loss. 2,000 here also 2,000. Profit also here 23,000, here also 23,000. But what is the difference? Here capital is more, your investment is more. Here your investment is less. That is the difference. That's why ROIs are changing. Return on the investments. Your profits are not changing. Here also 25 stocks, here also 25 stocks. What is changing? Your investment is changing. Your capital. Because your capital is changing, your ROIs are changing. Here your ROIs is only 3%. Your ROIs is 17%. You got the point. ROI will be calculated based on our capital. Because less capital, we got more profit. Suppose same 7 lakhs capital is there in futures, maybe you would have purchased 5 futures here. Instead of 1 future, you would have purchased 5 futures. At the time, you know how much profit you would have got? The 23,000 into 5. You would have got 1,15,000 rupees profit. For the 7 lakhs, the 7 lakh 73 or 74,000. 1,15,000 rupees profit you would have got. For the same 7 lakhs, here you would have got only 23,000 rupees profit. Of course, loss also will increase here for 7 lakhs. If it loss, it would have been 2,000 rupees here. Here 2,000 into 5, you would have got 10,000 rupees loss you would have got. You got the point. This is how you should understand. These are the reasons behind getting more profits, more ROIs. Hope now you would have got at least answer to this particular question. Two stocks gave this much percentage in a single day. Hope you got the answer to your question, right? So the magic is simple. It is the margin given by the brokers. That's it. Nothing more than that. Now you can ask another question. In future, every stock do we get 5 times margin? No. There are some risky stocks. Your brokers will be giving only 2 times margin. Some stocks they will be giving only 3 times margin. Some stocks they will be giving 1.5 times margin. So that margin, how much will be available for each stock? That will be available at our broker's side. If you contact your broker, he will be providing the complete list, having complete margins for each stock wise will be there. Or individual stock in zero the margin calculator, one by one you can search and you can find the margins. That way also you can find. Okay, this is about our first topic. Next topic, what is that? Fine-tuning the entry. Just give me a minute, let me drink some water. Okay, here in this stock, instead of taking type 2 proximal, why I took entry here? That is one question you should ask. Another question, why you got so much profit here? You got it. So first let me delete this. Why I have taken entry, I will show you how exactly I taken, I will calculate and show you. Okay, by default, what is the rule for HLQ zone strategy? Your target should be, if you are a beginner, 1:3 RR, you exit the trade. That is what I told you. And if you are an experienced person, you can target up to immediate 15-minute zone. And also I told you, if you are an experienced person and market is very sharp, try to aim for more target using trailing stop loss. Using either 1 minute trailing stop or 5 minutes trailing stop or hybrid, combination of 1 minute and 5 minutes. Initially you use 1 minute. Once the 5 minutes zones are created, you shift to 5 minutes. Intraday 5-minute zone is violated means probably that is an indication that something is change is taking place in intraday. 1 minute is okay. 1 minute a zone will violate, again it will come back. But 5-minute a zone is violated, intraday trading, that is a significant change. Immediately we shall have to book our profits if a zone is violated, 5-minute zone, when you are using trailing stop. So that's why always remember this zone. If you are a beginner, just now you completed the course, maybe next 3 months or 6 months, you take profits only at 1:3. Blindly just book the profit, don't bother. Why? Because initially getting more profits will improve your confidence. After booking the profit, it gave you a huge profit. You should not feel bad again. No. You already got some money. Be happy for that. Once you get confidence, once you are having confidence that you are able to get profits, even if some of your trades are stopped out, still it is okay for you. You won't feel any upset. When you get such kind of psychology is built in your mindset, then start looking for higher profits using trailing stops. So those things I will focus. Okay, suppose if you are an immediate, immediate means you recently completed your course and you want to plan your trade. Either 1:5 RR, 1:3 RR or the immediate 15-minute zone. Go to the 15 minutes. Here you have a 15-minute zone. Immediately, this is the immediate target. See, but we aimed for bigger target here using trailing stop. That's why we got 17. If you would not have used trailing stop, if you booked your profit, probably you get less, maybe around 4.4% ROI you would have got here. Around 6,000 rupees profit. Instead of 23,000, you would have got 6,000. Still it is a decent profit. No doubt in that. Let me draw the zone. This is the 15-minute zone. This should be your first target or immediate target. This is the first target. And this is the final target. How we concluded final target? Now prices are sharply moving down. See here it is bouncing, dancing. Prices are dancing here. Whenever you see prices are dancing at a zone, that is an indication that probably that is the time you should book your profit. Otherwise it will kill all your time on that day. Or sometimes price immediately reverse and it will go up. See, that is what happened here, right? Again they were started moving up. So probably in this candle or in this candle, one of these candles, you should realize and book the profit. Those who are expecting even more profit, already you got an excellent profit, no doubt intraday. Still if you are greedy and you are expecting even more profit, at the time by seeing such kind of candles, rejections, you should understand this is the area holding. Probably this zone will consume all the supply and it will again push the market up. That is what happened. It consumed all the supply here. Finally, no more supply, pushed the market up. If you did not book your profit here, see how much profit you might have been lost. Still you got profit, but how much profit you might have been missed. That is what you have to understand. Losing the profit is not the right word. Missing the profit is the right word. So that's why that kind of mindset, anyway, once your experience grows, you automatically learn all these concepts. Nobody should teach you. But anyway, here you have an advantage. Everyday HLQ analysis, you are all learning many new points. Okay, this is your immediate profit. Okay, but immediate, what is your target zone? Immediate 15-minute zone. If it is immediate 15-minute zone, can you take a trade? No, you cannot take the trade. Why? Because from your entry till this 15-minute zone, minimum 1:3 RR should be there. That you need to confirm first. If 1:3 RR is not there, you have two choices. Choice number 1, reject the trade. Choice number 2, you don't want to reject. You fine tune the entry in such a way you get a minimum 1:3 RR. If suppose the price did not reach the fine tuned entry, what will happen? Anyway, you will miss the trade. Instead of rejecting the trade, you will miss the trade. If luckily prices entered your entry, you get a trade, right? If you get a trade, see today how much profit you would have got. First of all, from this type 2 proximal till this 15-minute zone, do we have 1:3 RR? We have to check. How to check? You already learned in our training course. I didn't remember the lesson number, maybe lesson 12, 13, 14 or one of those videos, or maybe 16. One of those videos I explained long position and short position tools. If anybody remember in which lesson you learned long position and short position, please put in the comment section of this video so that you might be helping the other members. Okay, here I'm selecting, because it is a short trade, I'm selecting short position. You keep what short position is having, short position or long position, they have entry, target and stop loss. Top one is stop loss, and here entry, and the bottom one is your target. So what is your target? 15-minute zone. So adjust up to the 15. So this is the target. And what is your entry? Your entry is this type 2 proximal. So adjust up to this type 2 proximal. What is the type 2 proximal entry? 30,945. Sorry. Yeah, 30,945. This 30,945. Okay, this is your entry. But what is your stop loss? Distal line generally use stop loss. This is the distal line value. But we are using stop buffers also. What is the stop buffer value it suggested? Stop buffer value for Sriram Cement, it is saying 22.78 paisa. Instead of 22.80 paisa rounding, I am rounding to 25 rupees. So 25 rupees, if you add 25 rupees, 31,015 plus 25 is 31,040 rupees. So that you have to use in the stop loss. Sorry, something wrong. Your stop loss will be 31,015, 3140. Your stop level 3140. I think I selected a wrong tool. Sorry. Did I select a long tool here? I have to select short tool, because that is showing the wrong values. $31,040 is our stop loss. And your entry is 30,945. So this is the entry, 30,945. So see, exactly here entry is adjusted, and here is your stop loss. Okay, 30,945 is the entry. Okay. What is the ROI you are getting? 2.37. What is the minimum, not ROI, RR? The RR is 2.37. 2.37 RR, can you accept this trade? No, you cannot. So what you have to do? You have two options. One option, leave this trade. What is the second option? Fine tune the entry. How you fine tune the entry? Very simple. You open this your short position tool. In the short position tool, you increase the value, because this is the short trade. You increase the value, prices will be moving until you get the RR is 3. Now RR is showing 2.37. Now let me increase. See, now RR is increased to 2.38. Like that, you increase the value. until you get a 3. And keep on increasing the value. See, now I got 1:2.5, but not sufficient. Experienced people 1:2.5 is acceptable, but you are a beginner. So 1:3 minimum is required. So further I am increasing the value. I am increasing, further increasing until I want to get a 1:3 RR. So further I am increasing the value. Now 1:2.7 achieved. Even further I am increasing the value. 1:2.8 is achieved. Still not sufficient. I want 1:3. Maybe sometimes you may compromise at 1:2.95. That is okay. Even I am further going up. If 1:2.96, still I am going to 1:3. See, now you got 1:3. Now you make it. So here, this is the entry. Now what is my entry? My entry price is 30,959.90 paisa. This is the entry. Then only I want to accept the trade. Why? Because I want to book at this 15 minutes target. To book the profit at 15 minutes, minimum 1:3 RR is required. If I get minimum 1:3, if I keep my entry only at 30,959.90 paisa. If price reach, then only I take the trade. If price don't reach, I don't take the trade, I reject the trade. Anyway, we can't take the trade before that. Anyway, you decided earlier you don't want to take the trade because RR is only 1:3.8. Sorry, 1:2.8 earlier. But now you achieved 1:3 by fine-tuning the entry a little inside the zone. Till there if prices reaches, we take the trade. Is price reached? See the high of this candle? High of the candle is 30,960. 30,960. But what is 959.90 paisa? That means our entry, another 10 paisa moved up. That means definitely your trade would have been executed here. And your trade is executed, see, then sharply prices are coming down. Suppose you are a beginner. What is that I am recommending you? Book your profit at 1:3 RR. Now your 15 minutes target is 1:3 RR. Here you will be booking the profit. That way you would have got around 6,000 rupees profit you would have got. That would have given you 4.4%. But forever you book only at 1:3 profit level? No. Only first few months of your trading, maybe 3 months or 4 months, maximum 6 months. After that you earn some money, you get confidence. Now you want to take a little additional risks and you want to plan your trade. So what is that you want to do? Once price reached 1:3 RR, you will start using trailing stop loss. Once it reaches 1:3 RR. Now go to 1 minute time frame. Everybody please concentrate here. See, price reached 1:3 RR in this candle. Almost it reached, right? Okay. If not here, here it reached the 1:3 RR. In this candle, at 9:45 candle, it reached 1:3 RR. Now what you will do, those who want to implement trailing stop, don't book the profit. Make sure near to the zone, there is a 1 minute zone. Is there any 1 minute zone here? Yes. You have a rally, 3 base candles and a drop candle. Let me draw a zone here. Which zone it is? 1 minute supply zone. Why you are drawing? You want to hold. If this zone is violated, then only you want to book your profit. Otherwise, you want to extend your profit. You may ask a question. Suppose if this is violated, now I will be getting less profit compared to the earlier profit. Here you would have got 6,000 rupees profit. Suppose if you would have booked here, maybe your profit would have been reduced to 4,000 rupees. You may say 4,000 rupees is better or 6,000 rupees is better. Yes, 6,000 is better, no doubt in that. But why you are taking additional 2% or 2,000 rupees investment? Why are you making this 2,000 additional investment? So that if this investment is a good investment, you get more profit. If it is a bad investment, your 2,000 rupees will be losing that money. Anyway, from the profit only you will be losing. Already you got 6,000 profit. So maybe here, suppose if prices turned up and it is violated, a little above small buffer you will have. There is no specific rules for this buffer. Generally we keep a small buffer. Sometimes just it will pierce and again it will come down. That's why small buffer. Let me draw a horizontal line here. Yeah. And this horizontal line is my stop loss. That means if price cross this blue color line, I want to book my profit. Instead of booking my profit at this 1:3 RR level, I am booking my profit in this blue color line. If it is violated, at the time what could be my profit? My profit could have been, this is the entry price. Let us calculate that value also so that you get better clarity. Minus this blue color line could have been your profit booking. Trailing stop is used for profit booking. You would have got 144 rupees 55 paisa. Earlier you would have got how much profit? Earlier you got 80 rupees. No, 80 rupees is loss. When you get the profit, $929 is this one, trailing stop. Okay, anyway, 144 rupees profit you would have got. And what is the lot size? 25, right? Lot size is 25. Into 25, you got 3,613 rupees profit you get. Suppose if I book 1:3 profit level, how much I would have got? Let us do exact calculations, not rough calculations. So entry is same. Minus this 15 minutes demand zone, that is your 1:3 RR also, and 15 minutes demand zone, your 15 minutes demand zone, already we have drawn this. So your profit is 3720. 3959. Sorry, 3959. Yeah, 3959.90 minus, you would have got 299.9 into 25. You would have got 5,997. That means 6,000 rupees. That's why I'm saying 6,000 rupees profit you would have got. Otherwise, you would have got 3,613 rupees. That means 1,500 rupees you might have lost profit. Suppose if your analysis goes wrong, that 1,500 rupees is your investment by looking for more profit. That kind of decisions you have to take. Initial stage, that 1,500 rupees profit is also a good profit for you. That's why initially you will book the profit at 1:3 RR level. Once your experience grows, earlier you already might have got a lot of money from your profit booking. Some of that money you will invest for grabbing more profit. See today what happened? None of the 1 minute zones are violated until it reaches this zone. See, this is the first 5 minutes trailing. After that, any 5 minutes, yes, here you see, you have a rally base drop. Maybe this could have been your another zone. Trailing means what? Adjusting. So now this earlier one you delete, this is violated, you will book the profit. Next you see, you got drop base drop. Now this you delete. This is how you are trailing your stop. Next this rally base drop. Next here, this drop base drop. Now you see how we are trailing the stop. Next, this drop base drop. All these are all small candles. See, this is the one holded and again came here. So this is acting as a high liquidity zone. Did you notice? Lot of time this zone acted as a high liquidity zone, holding the prices. So that means prices are moving in between area. Maybe at some point you realize maybe this is the time to book the profit, and you will book your profit here. If you did not book your profit, maybe somewhere here you might have exited, or maybe another any new zones are created. There you might have adjusted. Maybe somewhere here you have a drop base, hidden body drop, two base candles and drop. Maybe here you might have booked your profit. If you did not book your profit in this area, here your 1 minute zone is violated. Probably somewhere here you booked your profit. But before that, you might have shifted to hybrid model. At some point of time, from 1 minute, you will shift to 5 minutes. See, here you have 1 minute, 5 minute zone here, right? This is the way you shift your profit. Drop base, drop 5 minutes, drop base, drop 5 minutes, drop base, drop 5 minutes. Here rally base, drop, something is there. Some hidden body, hidden zone. Probably here you might have booked your profit. In case if you didn't book your profit here, you might have booked your profit when it is violated. If you are not convinced with any of these zones, probably your zone would have been like this. Here you would have booked the profit in this candle. If not here. See, these are the different techniques you will be using. But our zone performance point of view from here to here, it gave you an opportunity. What are all these statistics we are showing? These are the statistics that explains the performance given by our high liquidity zone. And how, so maximum 17%. Did you grab the 17% or even less than this? That is all depending on our experience level and risk handling mechanisms and other rules. And our individual psychology also plays. Sometimes after getting profit, good profit, see for us, every day you are getting 5% or 6% intraday ROI. The day when you get 10%, what our mind says, we got double the profit. Let us sell, let us sell, let us book the profit, let us book the profit. That kind of music is coming from our mind. That will be influencing. It won't keep your mind in peace situation. Until you book the profit, it will always tell you, book the profit, book the profit. And we can't handle the tension and we will book the profit. After that, it will give you another 5% profit. Then we will be saying, oh, I missed the profit, I missed the profit. I would not have booked the profit. I would have got more profit. This is how we will be feeling. We never, the biggest problem with the human mind is it never keeps our mind in peace position. Always it will, even if you get 10% profit also, still we are crying. Why we are crying? That is the problem with our mind. That is the mind of human mind. I am not saying it is a problem with your mind or my mind. I am saying it is a problem, general problem with any human mind. We won't enjoy the 10% profit we are getting. We will always feel in a disappointed mood because the another 5% what we missed, we will be thinking about that. That is the mindset we have to change. The day when you change your mindset, then you will become a true professional trader. We all feel we learn so many advanced concepts, we are all professional traders. That is the way we feel. No. You will be a true professional trader only when you dominate your mind. Your mind should not dominate you. We should dominate our mind. That means controlling our emotions. That is the right word is the day when you control your emotions at maximum extent. I won't say 100%. And we are not machines, right? To control 100% of our mind. At a maximum level, if you control our mind, that day we will become a true professional traders. Got it? So this is how we fine-tune the entry, and also this is how we got a trailing stop. With this, we got this much profit. I think we had a lot of discussion, so much of time we spent. I take a break here. I will release second part of this video to discuss the most important scenarios. That is equity chart versus future chart. This is a very, very interesting topic. A lot of surprising things we will see here. So far what we covered, entry I covered, target, stop loss with stop buffers, fine tuning the entry I covered, trailing stops we discussed, ROI calculation, that logic also I explained, why we got more profits also we got. Probably the member who asked the question, he got answer to in this video. But next, many of you will be having doubts. We are analyzing trade in future equity chart, but we are taking trades in future. How to take the trade? Where exactly we have to trade? By comparing future, where we have to actually, when you take trades based on future charts by comparing equity, we get more profits than what I am showing you in the Excel sheet. At least you get another 500, 600 rupees more profit you get. Why you get? That is the magic of the volatility in the market. How volatility in the market changes the future prices also I will explain in that. So probably I am moving this discussion to second part of this video, because the current video itself is I think I don't know, maybe another more than 1.5 hours I might have explained. So let me take a break here. Let us continue with the future charts, that is equity chart versus. So this is our next topic. The same lesson 29.8, the second part of the video I will release. Probably this week, if not this week, next weekend we will discuss. I'll try to record the video this week itself. Maybe somewhere in the middle of the week, I will try to complete the next second part. So this is about the first part of the video. Hope this video might be helpful to you. Maybe some of your questions might have been addressed. Still, if you have any further questions, put them in the comment section. I will try to answer, or next video, the second part of the video, I will try to address your answers. See, always try to raise your questions if you have any questions. If you don't ask anything, I will be thinking that you got 100% clarity about the topic. Okay. Thank you all for attending this lesson. Let's continue with the second part of the video again. Thank you. Have a good day.